Welcome to FinSight's Wealth Your Way, brought to you by Finvesting. This is your go to podcast for decoding financial jargons, breaking down market movements, and simplifying wealth building strategies for everyday investors like you. Whether you are planning your first SIP, navigating market volatility, or dreaming of early retirement, we are here to guide you with actionable insights, minus the jargons. I am Narendran, your host and founder of Finvestin, and I believe financial wisdom should be accessible to everyone, not just the experts. So, plug in and power up your financial journey because wealth isn't just about how much you have, it's about how smartly you grow it. Quick reminder, play this episode at 1.5x for a better experience if you're short on time. Remember how everyone keeps telling you to cut back on those food delivery orders? Well, what if I told you that your food delivery habit could actually make you money? Mind equal blown, right? Today, we are diving deep into India's massive consumption story and how you, yes, you, can ride this wave to potentially build some serious wealth. Get ready for some genuinely valuable financial insights. Let's get straight to the point. India is on a shopping spree like never before. I'm not just talking about those midnight Amazon sales you can't resist. Let me drop some stats that will make your jaw drop faster than your phone battery during an intense gaming session. Private consumptions make a whooping 56% of India's GDP. In simple terms, more than half of our economy runs on what we buy. And guess what? This consumption figure is expected to double by 2034. Double. Just imagine the scale of that growth. Now, I know what some of you are thinking. Naren, isn't spending generally considered a bad financial habit? Well, not if you are smart about it. Instead of just spending on that overpriced coffee or the latest iPhone, what if you also invested in the companies that are making money of these consumer behaviors? Picture this scenario. You are ordering a biryani for the third time this week. No judgment. We have all been there. Now, statistically speaking, Indians order 2.5 biryanis every second. That's a lot of biryani. But instead of just paying for that biryani, what if you also own shares in the food delivery company, bringing it to your doorstep? And what if you also invested in the company that supplies premium basmati rice to all these biryani outlets? That's two revenue streams from a single consumer behavior. This is what I call the consumption investment cycle. You absorb what you and everyone around you is spending on, and then you invest in those trends and their entire supply chains. Let's get a bit more serious now. What's driving this consumption boom? For starters, our middle class is expanding faster than my waistline during festival season. By 2030, more than 50% of our population will be middle class. This is not just any middle class. These are often first generation educated professionals with disposable income ready to be spent. And where is this money going? Experiences. Casual dining is up by 49% and fine dining is up by 55%. Remember when eating out was a once a month luxury? Now weekend plans aren't complete without deciding which restaurant or which cuisine to try. Let's talk about our rural areas, the real dark horses in this race. Rural areas are now contribute 35% of our FMCG sales in India. The rural urban divide in consumption getting narrower by the day. Rural per capita spending grow by 9.55% year on year, outpacing urban spending which grew 8.3%. The even more interesting part, both urban and rural India are spending less on basic food items like wheat and rice and more on non-essentials. Rural India now spends 53% on non food items compared to 47% in 2011. For urban areas, it's up from 57% to 60%. Translation of all these, India is moving up Maslow's hierarchy of needs. Basic necessities are covered. Now it's time for entertainment, experiences, and luxury goods. And talking about Gen Z, the party is just getting started. India's Gen Z population is larger than the entire population of the United States. By 2035, every second rupee spent in India will come from a Gen Z. Insane, right? These digital natives influence 93% of family travel decisions. They care about value for money but also about brands being socially responsible and authentic. No wonder brands are bending over backward to win their loyalty. Now, here comes the $1 million question. How do you cash in on this consumption tsunami? One way is through consumption oriented thematic mutual funds that many AMCs are launching these days. These funds specifically invest in companies that benefit from India's rising consumption story, be it FMCG, auto industry, entertainment, or e commerce. But hold on, before you experience fear of missing out and rush to put your savings into these funds, let me add a disclaimer. This is not financial advice, and you should definitely check if these investments align with your risk appetite, goals, and overall portfolio. As we always emphasize at Fininvestin, everything has its time, but diversification is key. Let's dig deeper into specific sectors benefiting from this consumption boom. Take air conditioners, for example. With rising temperatures and increasing disposable incomes, AC sales are skyrocketing. But the smart investor doesn't just look AC manufacturing companies. Think about the entire supply chain. First, there is this obvious companies making the ACs themselves. Then there are companies making compressors, refrigerants, and other components. Go even deeper. What about the electronic components like printed circuit boards inside these ACs? And who makes these semiconductors that go on these PCBs? This consumption trend creates a domino effect. More demand for consumer electronics means more electronics manufacturing, which boosts demand for semiconductor manufacturing equipment. This in turn drives growth for capital goods companies that provide machinery and equipment to these manufacturers. What's also fascinating is how India is consuming data. We use about 90 GB per user per month, the highest in the world. This telecom revolution has completely changed the game. This means massive opportunities in digital content, streaming services, and e commerce. And one more statistic, luxury housing is also seeing a 38% year on year growth, the highest ever. Clearly, the dream of owning a premium home is becoming a reality for many Indians. But it's not all sunshine and rainbows. The middle class is feeling the pinch from persistent food inflation and stagnant wages. This is leading to some belt tightening when it comes to discretionary spending. There is also a disconnect in digital advertising. Over half of India's internet users are in rural and tier 2 cities. But most digital ads are still targeted metro cities and English speakers. That's a significant opportunity lost. On the flip side, recent tax cuts amounting around 1 lakh crore are expected to add 3.3 lakh crore in consumer spending. That could potentially add around 1% to India's GDP growth. Not too shabby, right? Let's talk about electronics and mobile phones in detail. Another massive consumption story. India's smartphone penetration continues to grow exponentially with millions of new users coming online each year. Beyond just investing in phone manufacturers or telecom companies, think about what happens behind the scenes. Every smartphone requires dozens of semiconductor chips. These chips need rare earth minerals and specialized manufacturing facilities. Companies that supply equipment to semiconductor fabs are seeing unprecedented demand. And there is the infrastructure need data centers, 5G equipment, fiber optic cables, all driven by our insatiable appetite for digital content. As consumption grows, domestic manufacturing is scaling up to meet demand. The production linked incentive schemes across various sectors are creating new manufacturing hubs across the country. Capital goods companies, those that make the machinery that makes other things, are perfectly positioned to benefit from this trend. When a new electronics manufacturer opens, who supplies the production line equipment? When a new food processing unit is set up to meet rural demand, who provides this industrial machinery? These are the companies operating behind the scenes of India's consumption story. The luxury sector offers yet another dimension to explore. The rise of high end real estate is not about housing, it's about creating demand for premium interior products, designer furniture, home automation systems, and high end appliances. Many of these companies are still in their growth phase and could represent interesting investment opportunities. Remember how I mentioned that rural and urban consumers are spending less on basic food items? They are shifting to packaged foods, ready to eat meals, and branded products. Companies that can successfully navigate this transition from unbranded to branded consumption stand to gain significantly. Let's not forget the experiential economy. As India's middle class grows, they are spending more on experiences rather than just physical products. Tourism, entertainment, hospitality. All these sectors are seeing robust growth. The companies providing these services, along with the entire ecosystem supporting them, present interesting or investment avenues. Consider the travel sector. It's not just about airlines and hotels anymore. There are online travel aggregators, experience curators, luggage manufacturers, airport retail, and countless other businesses benefiting from Indians' increasing wanderlust. Now, how can you, as an individual investor, approach this opportunity? At Finvestin, we often recommend a multi layer approach. First, identify broad consumption themes you believe in. Could be digital adoption, premiumization, rural growth, or experiential spending. Second, look beyond the obvious direct beneficiaries to find companies in the supply chain and adjacent spaces that might be undervalued but poised for growth. Third, consider the time frame. Some consumption trends play out over decades, while others might be more cyclical. And finally, diversify across multiple consumption themes rather than betting everything on a single trend. So, what's the takeaway from all this data and trends? Simple. India is on track to become the world's consumption capital. And while you are part of this consumption story as a consumer, you can also benefit from it as an investor. Remember, wealth creation is not always about cutting back of expenses. Sometimes it's about understanding where the money is flowing and positioning yourself to benefit from these trends. As Warren Buffett famously said, the best investment you can make is in yourself. But I add my own twist. The second best investment might be in the products and services that you and your fellow Indians are increasingly spending on. Think about it next time you are shopping online or ordering food or buying the latest gadget. Behind every transaction lies an investment opportunity. At Finvestin, my personal finance planning service, we help clients build portfolios that align with these long term trends while still meeting their individual financial goals. The power of India's consumption story is something we believe will create wealth for decades to come, but it needs to be approached with strategy and discipline. That brings us to the end of today's episode of Wealth Your Way by Finsights. We hope this information helps you move one step closer to defining and achieving your unique version of financial success. If today's episode got you thinking about your own rich life and how to achieve it, why not take the first step with Finvestin? Whether you are looking to optimize your savings, plan for your retirement, or make smarter investment decisions, we can help you create a personalized financial roadmap. Visit finvestin.com or drop a message on WhatsApp at 799 555 to schedule a free consultation. Let's turn your financial goals into a reality. Remember to subscribe to our Wealth Your Way episode on Spotify so you never miss our twice a weekly episode. If you found value in today's discussion, share it with someone who might benefit. This is your host, Naren, signing off. Until next time, remember that wealth isn't just about money, it's about creating the freedom to live your life on your own terms.